Capitaland actually has an offer on the table, and the offer has an implied consideration of $4.10.2. Now, the whole idea of this offer is to exchange the development arm of things with 95.1 cents in terms of cash and 0.155 units of CICT, Capital Integrated Commercial Trust. Now, the whole idea of this exchange is to really make Capitaland asset light, which I'll touch on in a quick while. And what they realize in this implied consideration is there's still a remaining CLIM share that Capitaland will morph into. Now, if you haven't seen my previous presentation, let me invite you there first. That gives a full backdrop as to why Capitaland is morphing into CLIM. Today's whole video is to really touch on CLIM, because if you look in terms of share price for Capitaland right now, you realize it's trading quite below $4.10.2. Today I'm filming it is $3.73 only. And so I'll be answering a few questions for you. The first is what kind of fee income that they are presenting to us as investors. I'll try to pull out numbers for you to have a good sensing of things. The second part, I'll try to justify why this price right now is trading so much lower than implied consideration of $4.10.2. So if this topic interests you, continue watching on. Hi guys, welcome back. Now, Capitaland really wants to focus on fee income moving forward and not so much in terms of property development gains. You know, as a developer, the returns, the performance is very lumpy because as you construct a property, it takes time. And then when it's constructed, that's where you recognize revenue, and usually it's very difficult to predict growth. So moving forward, they're trying to look asset light. So what this whole deal is about is to really split the development arm of things. We can't really control the split. So as investors, what we need to focus on is really the right hand side, CLIM, which will be primarily fund management, lodging, they own REITs, which are their subsidiaries. I'll try to give you, numbers to things in a quick while. So what does asset-light businesses look like? Let me throw you a few names. One name, Grab, which I've done a recent video on. Grab is a fintech firm. They have ride-hailing. Everything's on the app. It's a software. So Grab is asset-light. They don't own properties as much as Capitaland. Second name to consider, iFast. iFast is a platform for brokerage, and within it you will see that they build asset under management in financial products. Capitaland is building asset under management in property. So there's a slight difference, but they are all looking for fee-based income. So iFast is also another asset-light business model. So the question is, why are asset-light business models so desirable as of current trading conditions? Let me show you this article over here. This really illustrates things. It mentions that on average, asset-light companies earn a better return on asset. And that makes absolute sense, simply because there's less assets. Property developers, they have a lot of assets. Properties that are just on the ground phase, properties are close to completion, as well as properties that are mature already. So they own a lot of assets, and naturally the ROA is pretty lousy. So what does an asset-light real estate investment manager look like? In the presentation, they brought out a few names, and I want to investigate on one. This over here is Blackstone. And what do you see? They have real estate, they have private equity, they have hedge fund solutions, they have credit and insurance. So Blackstone is something that they look towards how they can morph their business, because right now they are in real estate. They have some private equity deals also. So at least on the left hand side of things, Capitaland already is doing in that space. So they really want to scale up and get a valuation similar to Blackstone, which I'll show in a quick while. Now let me put numbers for you to see in terms of the fees they are collecting from the REITs as well as fund management. REITs are listed, the fund management is private. What do you see over here? You see it's very nice, right? Compounded annual growth rate of 12% since 2017 all the way to 2020. But let me highlight to you the big jump, which is quite obvious. 2019. That was actually when Capitaland acquired Ascendas Singbridge. And that, of course, is the parent company, the sponsor of Ascendas REIT itself. So with that merger, they've actually incorporated a lot more fee income over there. But if we look past that merger, 2019 to 2020, you realize that the fee increment has been very moderate. That is only 4.4% growth. So it's not really organic growth at a very high pace. So this 12%, I would suggest take it with a pinch of salt whether it can be extrapolated moving forward or not. Now let me show you some other fees that they're drawing, because they own REITs, correct? If you buy Capitaland right now, you have exposure to 6 of their subsidiaries, which are REITs. And the thing that I've discovered looking through their financial statements is they actually derive quite a bit of income from dividends from associates, joint ventures, and investment. So let me highlight for you to see over there. 2020 was a record in terms of dividends they collected, $403 million. Now this is based on dividends. So if you add a fee income of what we saw just now in 2020, $306 million, total fee, that will be close to $700 million. Wow, pretty nice, correct? Purely financial assets. And what we realize is CLIM is valued at 14 billion in this whole presentation, which means if your fee income plus dividends is 700 million, your yield of CLIM could already be 5%, which is pretty respectable. I have a further summary table to show you. So this is actually how the net asset valuation is derived. What do we see on the left hand side? REITs, $7.8 billion in terms of the stake. Private equity funds, $5.5 billion. So the remaining net asset valuation from the investment properties is probably 1.4 billion. That makes the NAV of $14.7 billion. And right now, if you buy Capitaland, you are buying it at 1 times NAV. And the surprising part is they are trying to look like REIMs, real estate investment managers, which are trading at 2.6 times. Wow, so they are actually, giving us like a kind of a good deal. We're buying it at 1 times net asset value, but their peers they are trying to measure up are trading at 2.6 times. So what is the real catch? Why are markets pricing Capitaland so cheaply? This is the next section. Now, if you have benefited, smash the like button because it's taken our team several hours to produce this material for you. So hopefully it's giving you a better perspective whether Capitaland is a stock you're interested in or not. Now, the most obvious reason as to why this pricing does not match the implied consideration could be this. The indicative timetable means this whole deal needs to be voted in 3rd quarter and the deal could fall through. But my sensing of things is the chances are pretty remote. So let's not dive too much into this. We'll focus on the next few parts. So the first thing that I'd like to consider with you together is this portion over here. Could private fund stakes be overvalued? Let me highlight for you again. Private fund stakes 5.5 billion. Now the first thing is REITs 7.8 billion. That is transparently priced, is listed, so not too much issue of it being 1 times NAV. Investment properties, if we look at the details, you realize Ion Orchard, Robinson Road, former CBF building, Galaxies. These are buildings that you can see, they're pretty good buildings. I do think that the valuation for that is pretty reasonable. So the only thing that I could really think of is, could there be certain risk that this private fund stake is overvalued? Because if we look at the list, we don't know too much, as laymen. These are some names, pretty opaque. So we really don't know. Could this unlisted portion be overvalued, or the fees that are collecting $306 million from REITs and fund management? So maybe that fee is not sustainable. If not, the price should be trading close to the implied consideration. So do you think this could be a reason? Leave it in comment sections. I'll be keen to hear from you also. With that, let's move on to the second possible reason that I've identified. Lodging and hospitality. Let's look at the right hand bottom. Lodging, the asset under management right now is $27.7 billion. They are targeting to build 160,000 units for lodging by 2023. Let me share with you what Capitaland owns in terms of lodging. They have Escort. Escort is the sponsor for Escort REIT, which is art. And with that, they also have unlisted hospitality funds. So in terms of hospitality, 2020 was a bad year. If you haven't seen the losses, let me pull this summary up, which is in the presentation material. You realize that CL Lodging has lost $600+ million in terms of revaluation impairments. So could that mean that lodging assets will continue to underperform and bring about losses for the group? I think that's a possible second reason that we need to entertain. So let's recap together. The first reason, could private equity funds be overvalued? Now, since they're private, there's no public information. I don't really know about that, so I can't comment. So rather, I look in terms of margin of safety. Is there a margin of safety that you can inbuild into this, such that if they are overvalued, it's not that bad in such a situation? And in any case, Capitaland has a good reputation, so I'm willing to look past that portion. If you look in terms of trading price, Capitaland right now, if you buy at $3.73, you realize that the CLIM portion of things would work out to be only $2.50. That means you are buying CLIM at a 12% discount to what they did in terms of the original implied consideration. Maybe this 12% discount is a good buffer, especially since we know that the REITs are listed. That's okay. Since we know that some of the buildings they own, that they have stakes in, are also looking pretty okay. So this 12% is really to buffer against, the private equity portion being overvalued. So that's my train of thought. The second part is to understand the lodging portion. If you look in terms of the whole material, what I've realized also to share with you is that they have a lot of emphasis on the lodging. Something very surprising to me, because as of now, it doesn't look such a big deal. But they've given a lot of consideration to things over there. You see a lot of slides such as this, projecting lodging income to grow. And then they reiterate their target of 160,000 stabilized units. For every 10,000 stabilized units, it derives 20 to 25 million in terms of fee income, which means this could bring in 320 to 400 million by 2023. Now, Capitaland CEO right now is pretty young. He's Mr. Lee Chi-kun. Let me pull out his LinkedIn over here, it's public. So what do you realize over here? He's previously from Escort, which means his experience being the CEO there is really going to help him understand lodging a lot better. I guess that's why they could be really betting big a lot on lodging. And in my opinion, lodging now could be undervalued because we are still unsure about travel. And eventually, when we get past COVID-19, we fully recover, lodging could really be underestimated. That's my sensing of things. And if we pull back the last year, which was a normal year, 2019, I can show you over here that lodging used to be a very profitable segment for them. They brought in earnings before interest and taxes, $575 million together with their subsidiary, which is ART. So hopefully I've given you a good presentation. It shows two key points, whether we have a margin of safety as well as lodging. Could we be underestimating it? If market is underestimating, it could be an opportunity to consider. So if you benefit, again, smash on like. And I'd also like to invite you to a previous video I've done on CDL. CDL is also another developer in Singapore that you should know of. They're having a very different circumstance. So if you're keen to find out more on CDL, let me invite you there. That tutorial will help you answer more on the opportunity for CDL. With that, I'll sign off. Take care and goodbye.